What truly separates, the good from the really extraordinary? We talk a lot about talent, opportunity,
Uh-huh.
but is there something deeper, like a drive that just keeps pushing someone?
Yeah, absolutely. Like passion.
Exactly.
Yeah.
Think about Warren Buffett, the name, well, it means financial success, right?
Right. Hard to argue with that.
But his story, it's not just about smart investments. It seems fundamentally, it's about this lifelong um, passion for business and investing.
That's spot on. And in this deep dive, look, we're not just going to rehash the same old Buffett biography.
Right.
We've really sifted through our sources to see how this passion, this thread, runs through his whole career.
Okay.
Our goal is, to pull out those core insights, those little nuggets of knowledge about what really fuels a journey like that,
Mm-hmm.
and present them in a way that's valuable, engaging for you, someone who wants to get the drivers of success without getting sort of bogged down in all the tiny details.
Precisely. We want to get past the surface stuff, the achievements, and really understand the why.
The motive.
Yeah. How has this love for what he does shaped his decisions, Berkshire Hathaway's growth, even how he gives back?
It touches everything.
So let's dive in. Right at the beginning, those early sparks of Warren Buffett's, well, engagement with commerce.
Okay.
Even as a kid in Omaha, his whole approach to making money was different.
Yeah, it wasn't just chores for allowance.
No.
Yeah.
The sources point to them as these early experiments in the world of commerce.
Oh.
What really jumps out at you from that time?
Well, what's fascinating is how proactive he was. He wasn't just waiting for chances. He was actively figuring out ways to make money, selling gum, newspapers, even that pinball machine idea in the barber shop.
Oh yeah, the pinball.
And then
Yeah.
expanding it. It wasn't just about pocket change. It really shows this fundamental curiosity about how business works, how value is generated. It's a mindset, even back then.
And it wasn't just the earning part, was it? It was the reinvestment. Buying stocks when he was 11, filing his own tax return, figuring out deductions at 13, buying farmland at 14,
Incredible.
and apparently always pouring the profits back in. That seems pretty, well, unusual for a kid.
It's definitely not typical. It signals this deep, maybe innate understanding that money could be a tool, for more growth.
Mm-hmm.
If we look closer, you can almost see 3 early signs of this passion brewing.
Okay, like what?
Well, first, as we said, that built-in drive to find ways, create ways to make money.
For devising.
Second, actively going out and pursuing business opportunities. Real initiative, way beyond his years.
Mm-hmm.
And third, that early fascination with how finance actually worked. Getting totally absorbed in those books about securities in his dad's office. That wasn't just homework reading. It was full immersion.
And this wasn't just some, phase he grew out of. It had real consequences, didn't it? Pretty significant ones.
Oh, absolutely. You see him developing this sharp business sense early on, practical financial literacy that most people, well, they just don't get at that age.
Yeah.
And maybe the most surprising thing, by the time he finished college, he'd reportedly saved around $90,000, adjusted for the time, obviously.
20,000.
Yeah. It's a real testament to that consistent effort, the smarts, all fueled by this passion. Plus, all those early ventures, surely he made some mistakes too.
Oh, for sure.
Those provided priceless, real-world learning you just can't get from a book.
So how did he, channel this passion back then? What did it actually look like day to day?
Well, it showed up in very real ways. Starting and actually running those little businesses.
Right.
Consistently reinvesting the profits to buy more assets or, grow the businesses. And spending serious time on self-education, reading, learning about the stock market, all that. These weren't just random hobbies. They were consistent actions driven by real interest.
Of course, he wasn't operating in a vacuum. What else could a kid have been doing? What were the sort of competing things vying for his attention?
Well, the obvious one is just other kids, doing typical kid stuff, sports, hobbies, just hanging out in ways that didn't involve making money.
Yeah, normal childhood.
Then there was the societal pressure, maybe, for a more traditional path. Focus just on school, get ready for a steady job.
Mm-hmm.
And it's interesting, apparently his father initially wanted him to focus more just on college, maybe saw the businesses as a bit of a distraction.
But Buffett managed both.
He did. He found a way to integrate them.
So thinking about someone listening now, maybe with their own entrepreneurial idea, what are the big lessons from Buffett's really early years?
I think 3 things really stand out. First, Start early. Develop that mindset. Embrace earning and investing, even if it's small scale at first.
Okay,
Second, don't fear early mistakes. See them as learning chances. Real-world tuition, basically.
good way to put it.
And third, realize that big opportunities, foundational knowledge, can come from pursuing things that seem small or maybe a bit odd at first. Follow that passion.
That early immersion definitely set the stage for uh, a really key decision, going after Benjamin Graham.
Oh, pivotal.
This wasn't just picking a college, it was actively hunting down someone he really admired.
Exactly. For Buffett, Graham was like the embodiment of value investing, the ideas he'd already started latching onto from his reading.
His hero, the source called him.
Right. And his actions then, they just scream passion, the intensity of wanting to learn from the best.
Yeah.
He didn't just sign up for classes at Columbia, he tried to get a direct connection, even offered, famously, to work for Graham for free.
For free? Wow. That's commitment.
It's a powerful statement, isn't it? It says, your knowledge is worth more to me right now than money.
Yeah, definitely more than just typical student behavior, not just sitting in lectures, but wanting to be in Graham's world.
Precisely. He picked Columbia because Graham was there. That's deliberate, focused, driven by that intellectual passion,
Yeah.
and offering to work unpaid. It just highlights how much he valued getting that specific knowledge, that experience, straight from his hero. It wasn't about a paycheck. It was about mastering a craft.
Right.
And of course, during this time, he really soaked up Graham's core idea: price is what you pay, value is what you get. That became like bedrock for him.
So what were the really clear signs of passion during that Graham period?
Well, first, just the act of deliberately seeking Graham out, singling him out as the mentor.
Okay.
Second, that offer. Working for nothing. It shows learning was the absolute priority over earning, at least then. And third, how deeply he engaged with Graham's ideas. They were complex, right? He didn't just memorize them, he internalized them, wrestled with them, built on them.
And what were the big advantages that came out of chasing Graham down like that?
Well, the huge one was getting that solid foundation in value investing,
Oh.
a framework he's used, well, basically forever. He also built that crucial mentor relationship that had to be invaluable for shaping his thinking.
Yeah.
And you've got to think, that kind of dedication, it probably made him stand out, likely got him better learning opportunities just by showing that initiative.
So how did he start actually using this knowledge he was soaking up?
Right away, really. He started focusing hard on fundamental valuation analysis, the Graham and Dodd principles.
Okay.
Actively looking for stocks, for securities that seemed to be selling for way less than what he figured they were actually worth, their intrinsic value. And even in his early investments after Columbia, he was applying those principles with discipline.
What were the other ways people thought about investing back then? The ideas that were different from Graham's approach?
Well, you had the common idea, which Graham and Buffett pushed back against hard, that the market price is the value. Whatever the ticker says, that's what it's worth.
Right. The efficient market idea. Kind of.
Sort of a precursor, yeah. Then you had the dominant Wall Street culture, which was often about short-term trading, trying to guess market swings.
Timing the market.
Exactly. And even the early forms of modern finance theory, focusing on efficient markets, beta, statistical stuff. It was a different angle than Graham's focus on the actual business value.
So for someone listening, maybe wanting to get better in their own field, what are the lessons from Buffett finding his mentor?
I think, first, actively look for mentors. Find people who have the skills and the principles you admire and reach out.
Okay.
Second, really go deep on the fundamentals. Understand the core concepts of your field inside out.
Solid advice.
And finally, realize how valuable it is to prioritize learning and getting hands-on experience, even if it means sacrificing something else in the short term. That focused dedication, it can be absolutely transformative later on.
Okay, so from being this super dedicated student to almost accidentally taking over a whole company, the Berkshire Hathaway origin story under Buffett is definitely not what you'd expect.
It really isn't. It started as, what looked like a standard value play in a struggling textile company.
Right. Berkshire Hathaway was a textile mill.
Yeah. Buffett started buying shares because he thought, okay, the assets are worth more than the stock price suggests. Pretty standard Graham approach.
But then something happened.
Something very personal happened. A disagreement with the owner at the time. It became this, unexpected trigger for a much bigger move.
A personal fight led him to buy the company. Tell me more about that.
Well, the sources describe this exchange with the owner, Seabury Stanton, about buying back Buffett's shares at a certain price. Stanton apparently reneged slightly on the verbal agreement,
Huh.
and Buffett felt insulted, maybe even cheated. It was apparently this slight that made him decide, right, instead of selling my shares back, I'm going to buy more shares. Enough to take control.
Just to fire the owner? Is that really what he said?
That's the famous quote attributed to him, or at least part of his motivation. Just to fire the owner.
Yeah.
It shows this like emotional inflection point that ended up having these massive long-term consequences.
Wow. That's quite a turn. But how does a failing textile mill become the giant, diversified company Berkshire is today? That's the real magic, isn't it?
That's the crucial pivot. Buffett had the vision to repurpose Berkshire. He realized the textile business itself, probably a dead end.
Yeah, tough industry.
But the company structure,
Yeah.
that could be a vehicle, a platform for buying and investing in other much better businesses in totally different fields. That shift in purpose was everything.
And so we saw that play out with some pretty big buys later on, right?
Oh, yeah. Think about See's Candies, J.I.Co., Fruit of the Loom much later. None of those are textile companies.
Right.
They represent him putting his evolving investment philosophy into practice, using Berkshire as the holding company, the platform to own these great businesses.
So looking at this unexpected takeover and transformation, what does it tell us about Buffett's passion?
Well, first, just the sheer grit, right? Taking what looked like a maybe okay, maybe bad investment and turning it into the foundation of his whole empire.
Yeah, resilience.
Second, the vision. Seeing past the dying textile mill to its potential as this versatile investment vehicle. And third, that really strong, maybe even emotional reaction to the owner. Taking control like that, it shows a level of deep engagement, of conviction that goes way beyond just crunching numbers.
And what were the main benefits that came out of this, let's call it, fortunate accident?
Well, it created the actual holding company structure, Berkshire Hathaway, that became the engine for everything that followed, a permanent capital base.
Okay.
It gave him a platform to apply his ideas on a much bigger, more diverse scale as his thinking evolved.
Right.
And it just showed this incredible adaptability, turning a potential mistake, or at least a difficult situation, into this huge success.
So how did he apply his passion specifically to manage that big shift for Berkshire?
By fundamentally changing what the company did. Shifting from making textiles to being a holding company that bought other businesses.
Okay.
He used Berkshire's capital strategically, buying companies that fit his evolving value principles.
Right.
And crucially, he applied his own judgment, his long-term view, to steer the ship in this completely new direction.
Were there other paths he could have taken then? Other competing ideas?
Oh, sure. He could have kept trying to make the textile business work, poured good money after bad, maybe.
Yeah, happens all the time.
There were probably other people who might have bought Berkshire Hathaway, maybe liquidated it, or tried something else entirely. And of course, he could have just cut his losses, sold his shares, and looked for different investments altogether. His choice to take control and redirect it shows a very specific vision and a lot of confidence in his own evolving strategy.
So for entrepreneurs listening, what are the key lessons from this sort of accidental empire phase?
I'd say first, stay flexible, be adaptable. Success can pop up from unexpected places, even from what looks like a setback initially.
Okay, good point.
Second, try to look beyond the surface. See the potential in something, maybe as a vehicle or a platform, even if its current state isn't great.
Think creatively about assets.
Exactly. And third, don't be afraid to pivot hard if you need to, even if it means junking your original plan. Sometimes the biggest wins come from those unexpected turns.
Okay, so Berkshire Hathaway is now his vehicle. And alongside Charlie Munger, this is where Buffett really hammered out and solidified what people now call the Warren Buffett way of investing.
All right.
It built on Graham, but it also moved beyond him in important ways.
That's a really crucial point.
Yep.
Yes, Graham was the foundation, the value bedrock, but Buffett, especially with Munger's influence, evolved significantly. The key shifts were putting much more weight on the quality of the business itself, its durability, its competitive advantages, what they call the moat.
The moat, right.
Also, focusing heavily on the quality and integrity of the management team, and adopting that incredibly long-term view. The famous line, "Our favorite holding period is forever."
Yeah.
It became less about just finding statistically cheap stocks and more about finding truly great businesses to own for the long haul.
And we see that long-term approach in some of his most famous holdings, don't we?
Absolutely. Think about Coca-Cola, American Express, held for decades.
Decades, yeah.
These weren't just about buying low at one point in time. They were about identifying companies with these powerful, lasting advantages, great managers, and potential to keep growing for a very, very long time.
Uh-huh.
And, it's also interesting to look at what he didn't invest in for a long time, like tech
Right,
companies,
he famously avoided tech for years.
which came from his discipline, his principle of staying within his circle of competence, only investing in businesses he felt he truly, deeply understood.
So what really defines this mature, refined investment philosophy? What are the hallmarks?
Okay, I'd say first, this incredibly deep, almost obsessive analysis of businesses. Thinking like an owner, like you're going to run the whole thing yourself.
Right.
Second, that rock-solid commitment to owning for the long term, tuning out the market noise, the short-term ups and downs.
Resisting the urge to tink.
Exactly. And third, applying a clear, consistent, rigorously followed set of investment principles to every single decision. No exceptions.
And the benefits of being so patient, so disciplined. They've been pretty huge, obviously.
Immense. I mean, it led him to find and invest in some of the world's most successful, most enduring companies, generated unbelievable long-term returns.
Yeah.
It also gave him the emotional strength, the discipline to ride out market crashes and panics without ditching his strategy.
That's huge.
And crucially, it let the power of compounding just work its magic over decades, turning good investments into truly massive wealth.
So how does he actually apply this philosophy when he's looking at investments? What's the process?
Well, he sticks religiously to that circle of competence. If he doesn't feel he understands the business and its industry deeply, he just passes. Doesn't matter how hot it seems.
Discipline.
Then he digs into the fundamentals, profitability, return on equity, competitive moat, management quality, all those core business things. And he just refuses to get caught up in short-term trends or feel pressured to trade frequently. Patience is key.
What are some of the other ways people invest that he actively avoids? What's the contrast?
Well, you see loads of investors chasing the latest fad. Hot stocks, momentum plays, often without much thought to the actual business value.
Right. Fear of missing out.
Exactly. Then there are those who still basically think price equals value. Whatever the market says today is the truth. And you still have the influence of, more modern finance theories that push for constant portfolio tweaking, diversification based on complex math rather than deep business understanding. He rejects most of that.
So for entrepreneurs trying to build something that lasts, what are the main lessons from Buffett's investment philosophy?
Okay, 3 things. Develop your own clear, consistent philosophy or set of principles for your business decisions. Stick to it.
Okay.
Focus relentlessly on creating real, long-term value, not just hitting quarterly numbers or chasing short-term buzz.
Think long.
And third, maybe the most important, know your business, know your industry, know what you're good at, your circle of competence, and stay within it. Don't get tempted into areas you don't truly understand.
That idea of ownership, it doesn't just apply to his stocks, does it? It seems to shape how he actually runs Berkshire Hathaway. He thinks like an owner of the whole thing.
Absolutely. That's fundamental. For him, buying stock isn't just buying a ticker symbol, it's buying a piece of a real business.
Right.
And that view just permeates how Berkshire is managed. The
Yeah.
big focus is on finding really good managers, talented, honest, hardworking for the operating companies, and then setting things up so their interests are aligned with the long-term shareholders, like truly aligned.
And you see that in how decentralized Berkshire is and his whole take on executive pay, right?
Exactly. He gives the managers of Berkshire's companies huge autonomy, trusts them to run their businesses day to day.
Hands off, mostly.
Very much so. And his communication, especially those annual letters, they're incredibly open, treating shareholders like real partners.
Yeah, they're famous.
And his views on compensation, especially avoiding stock options that don't really reward smart capital allocation and long-term value creation.
Yeah.
That's pure owner thinking.
So what are the clear signs of this owner's mindset in how he manages?
First, just consistently treating shareholders as partners, co-owners,
Right.
always focusing on long-term value for them, communicating clearly.
Okay.
Second, the intense personal interest he takes in judging the quality of the managers running the businesses, not just their resumes, but their character, their integrity.
People matter.
Hugely. And third, that commitment to being totally candid and straightforward in his communications, even when the news isn't great. No sugarcoating.
And what are the benefits of running a company that way, with that long-term owner view?
Well, it tends to attract and keep shareholders who are also long-term focused, people who understand the strategy and are patient.
Like attracts like.
Sort of, yeah. It also really empowers and motivates the managers of the actual businesses. They know they're trusted, they have autonomy,
Hmm.
and it helps keep the stock price somewhat tethered to the real underlying value of the businesses. Attracts investors, not just speculators.
So how does he put this owner passion into practice day to day leading Berkshire?
By focusing manager selection on character, ability, and alignment with Berkshire's values, often more than just, fancy degrees or org charts.
Got it.
By making sure his own financial interests are massively aligned with the shareholders. He eats his own cooking, basically.
Right. Skin in the game.
Tons of it. And by constantly focusing on that intrinsic long-term business value, not getting distracted by market swings or short-term earnings pressure.
What are some of the typical corporate practices that really clash with this owner-centric way of thinking?
Oh, lots. You often see managers focused on just making the company bigger empire building, even if it doesn't actually help shareholders much.
Yeah. Mergers for the sake of size.
Right. Or companies handing out stock options left and right that reward executives just for sticking around, or for earnings growth that came from just retaining capital, not deploying it smartly.
Hmm.
And in finance, you still see brokers incentivized to encourage lots of trading, high turnover, which often isn't in the owner's best interest.
So distilling it down, what are the core lessons here for entrepreneurs about leading with an owner's mindset?
Treat your investors, your stakeholders, like real partners. Align your interests with theirs, genuinely.
Crucial.
Hire the absolute best people you can find, people of character and talent, and then trust them. Give them room to run.
Empower them.
Exactly. And communicate. Be transparent, be honest, always with a long-term view. Build that trust.
Moving beyond the business success, which is obviously staggering, Buffett's philanthropy is another huge part of his story. It seems like another powerful way his values, his passion manifest.
It's extraordinary, isn't it? Committing to give away over 99% of his fortune. It's hard to comprehend.
It really is.
It shows this profound sense of responsibility, this idea that the wealth isn't just for him, but can be used to tackle big problems. It's a perspective far beyond just personal gain.
And he's doing it during his lifetime, too, not just leaving it in a will.
Exactly. That was a conscious choice, to start giving it away while he can still see the impact, maybe guide it a bit. And his huge contributions to the Bill and Melinda Gates Foundation, backing their work in global health and development, that's a prime example of this proactive approach.
And we're talking about billions, right? Mostly in Berkshire stock.
Billions upon billions, yeah. Donating huge chunks of Berkshire stock every year. Plus, co-founding the Giving Pledge, which has nudged many other billionaires to commit to giving away most of their wealth, too.
What seems to be driving this? What are the underlying motivations for this level of generosity?
Well, one thing he talks about is just seeing it as fulfilling a logical pledge. He says he's giving up nothing he needs or wants. There's a kind of pragmatic clarity there.
Yeah, very Buffett-like.
He also famously said, "Society has a use for my money, I don't," which shows this real grasp of the potential impact.
Right.
And maybe deeper down, he's talked about finding true meaning in this act of giving back, something beyond just accumulating more wealth.
What have been the wider impacts of this philanthropic passion?
Well, huge impacts on global health, poverty reduction through the Gates Foundation and others he supports, millions of lives potentially improved or saved.
Yeah.
It's also been said his practical, results-oriented approach might have even influenced the culture at the Gates Foundation.
Interesting.
And just his example, his commitment, it really challenges the old idea of just passing down dynastic wealth. It proposes a different model for the super rich.
How has he actually put this passion for giving into action? What does it look like?
Well, making those massive, regular annual donations of Berkshire stock, that provides consistent funding that can grow over time.
Okay.
Directing the funds quite strategically towards areas he believes in, where he trusts the organizations doing the work, and using his influence through the Giving Pledge to actively encourage others with huge wealth to do the same, leading by example.
What were the alternatives? How else could someone with that kind of money have used it?
Well, obviously, he could have just kept it all, pass it down. He'd probably be the richest person on Earth by an even wider margin.
Sure.
He could have spent it on, yachts and islands and extreme luxury, which famously isn't his style at all.
No, definitely not.
Or he could have picked different charities, different causes that maybe align with other interests. His focus has been pretty clear.
So for entrepreneurs who do achieve major financial success, what are the key takeaways from Buffett's philanthropy?
Maybe think about your own definition of success. Does it go beyond just the money? Does it include making some kind of broader impact?
Good question to ask.
Reflect on the potential good that the wealth you create could do in society.
Okay.
And if giving back resonates with you, find causes you really believe in and commit to supporting them meaningfully. Make it impactful.
It really is amazing that even now, in his 90s, Buffett's passion for business, for investing, for teaching, it's still so clear. It really speaks to a lifelong thing.
It really does. And it's fascinating to see how it still shows up. His famous frugality, right?
Yeah.
Living in the same house forever.
Yeah.
It's not because he has to. It's clearly driven by these deep-seated values and priorities. It aligns with everything else.
Right.
And even with all his success, all his experience, he's still so willing to share what he knows, often framing himself humbly like he's just passing on Graham's wisdom.
And he's also clearly thinking about the future, making practical plans for continuity.
Absolutely. You see that long-term thinking again. Naming Greg Abel as his successor CEO for Berkshire, that provides clarity.
Yeah, important step.
And adjusting the plans for his remaining wealth, directing it to a charitable trust run by his kids, ensuring the philanthropy continues effectively.
And we still see him out there, engaging, right?
Yeah.
Not just fading away.
Not at all. Still leading Berkshire at an age most people retired decades ago.
Incredible energy.
Still spending hours at the annual meetings, patiently answering shareholder questions. That takes stamina, but also passion.
For sure.
And still committed to sharing his philosophy, his insights, even with people who might use them to compete with him someday. It shows that passion for teaching, for getting the ideas out there.
So what are the real signs of this enduring passion in his later years?
Well, first, just the fact that he clearly still loves doing it. He finds real joy and purpose in running Berkshire, even now.
Yeah, you can tell.
Second, that willingness to spend hours engaging directly with shareholders with that level of candor and patience. And third, just his continued dedication to passing on what he's learned, wanting to leave that intellectual legacy.
What are the benefits of that sustained passion for Berkshire and maybe more broadly?
For Berkshire, it's provided incredible stability and continuity, huge reassurance for everyone involved.
Definitely.
More broadly, his willingness to teach has spread these valuable ideas about investing in business all over the world.
True.
And, his simple lifestyle, it kind of reinforces that message of humility, of focusing on real value, not just the flashy stuff.
How does he keep applying this passion now in his daily life and leadership?
Well, he's still actively involved in Berkshire's strategic direction, in key decisions.
Right.
He continues to live his life and shape Berkshire's policies in line with those core values: long-term thinking, integrity, intrinsic value.
Consistency.
Total consistency. And he's clearly put a lot of thought into planning for the future, leadership succession, philanthropic impact, thinking beyond himself.
What are some of the things in today's world that kind of push against that enduring passion, that long-term view?
Oh, lots. There's such a huge focus everywhere on instant gratification, right?
Yeah.
Short-term results. That's the opposite of his approach.
Yeah, quarterly earnings pressure.
Exactly. There's a constant pull towards extravagance, showing off wealth, which he just ignores. And there's always the risk when ideas get popular that they get oversimplified or twisted. His philosophy isn't immune to that.
So, final thoughts. What entrepreneurial lessons can we really take from Buffett's lifelong passion and that long-term focus?
Stay grounded. Keep your discipline. Stick to your core values no matter how successful you get. Stay humble.
Okay.
Share what you know. Be generous with your knowledge. Mentor others.
Good thing.
And think long. Think strategically about the future of your business, yes, but also about the legacy you want to leave behind.
It's a powerful story. Warren Buffett's life looked at through this lens of just unwavering passion for business and investing. It really offers this profound lesson, doesn't it?
It really does.
It shows so clearly how that deep, genuine love for what you do can fuel incredible dedication, resilience when things get tough, and ultimately lead to extraordinary lasting success.
Yeah.
His journey, from selling gum in Omaha to being this global icon, this leader in philanthropy, it's just a massive testament to the power of that passion.
Absolutely. And his lifelong love for it hasn't just shaped his own amazing path, it's influenced the entire world of finance and inspired probably countless people to follow their own passions with that same kind of dedication.
Indeed. Well, on that note, we'll wrap up this deep dive into the enduring passion of Warren Buffett. But maybe one final thought for you to reflect on.
Okay.
Consider the huge role of delayed gratification in Buffett's success. That ability to wait for the payoff.
Right, the opposite of instant gratification.
Exactly. Contrast that with how prevalent, maybe dominant, instant dopamine pleasures are in our world today.
Yeah.
So the question to ponder is, how does developing that ability to delay gratification actually enable you to apply passion consistently over the long term, to build real significant value?
That's a great question. Something to really chew on.
It is. Thank you for joining us for this exploration. We look forward to our next deep dive. What truly separates the good from the really extraordinary? We talk a lot about talent, opportunity, but is there something deeper, like a drive that just keeps pushing someone?
Yeah, absolutely. Like passion.
Exactly.
Yeah.
Think about Warren Buffett, the name, well, it means financial success, right?
Right. Hard to argue with that.
But his story, it's not just about smart investments. It seems fundamentally, it's about this lifelong passion for business and investing.
That's spot on. And in this deep dive, look, we're not just going to rehash the same old Buffett biography.
Right.
We've really sifted through our sources to see how this passion, this thread, runs through his whole career.
Okay.
Our goal is, to pull out those core insights, those little nuggets of knowledge about what really fuels a journey like that, and present them in a way that's valuable, engaging for you, someone who wants to get the drivers of success without getting sort of bogged down in all the tiny details.
Precisely. We want to get past the surface stuff, the achievements, and really understand the why.
The motive.
Yeah. How has this love for what he does shaped his decisions, Berkshire Hathaway's growth, even how he gives back?
It touches everything.
So let's dive in. Right at the beginning, those early sparks of Warren Buffett's, engagement with commerce.
Okay.
Even as a kid in Omaha, his whole approach to making money was different.
Yeah, it wasn't just chores for allowance.
No.
Yeah.
The sources point to them as these early experiments in the world of commerce.
Oh.
What really jumps out at you from that time?
Well, what's fascinating is how proactive he was. He wasn't just waiting for chances. He was actively figuring out ways to make money, selling gum, newspapers, even that pinball machine idea in the barbershop.
Oh, yeah, the pinball.
And then expanding it. It wasn't just about pocket change. It really shows this fundamental curiosity about how business works, how value is generated. It's a mindset, even back then.
And it wasn't just the earning part, was it? It was the reinvestment. Buying stocks when he was 11, filing his own tax return, figuring out deductions at 13, buying farmland at